by the train station, I think your Class A numbers hold. The vacancies aren't that bad. I mean, you're in the 30s, you know, mid to high 30s in the downtown good buildings. I mean, you guys at Gateway are getting good numbers. I think when you get away from the train, it drops closer to the mid-20s. I think when you get out to the suburbs, you could be back to the high 20s in the Class A plus buildings and into the mid-20s in the lesser quality buildings and even low 20s in the lesser quality buildings. It just depends on how much work's involved, what quality building it is, and we really run the gamut, especially on the east side. The suburban White Plains market, for instance, is over 20% on its vacancy rate. They're very hungry to make deals. My read, and you may be correct, Bill, but in downtown White Plains by the train, it's not so bad.
Let's talk about vacancy rates.
Downtown, we represent the Gateway building. That's the black tower across from the clock tower. And we have a few suites. Our asking rent is $42 a foot, and we're doing deals and have done deals this year in the high 30s. So the Class A market, premium locations, has held up. Now we did adjust our asking rent from 45 to 42, so our bid to take is still about 10 to 15%. But we've seen healthy demand, and I know 10 Bank Street, Mac Cali, and the other towers, 360 Hamilton, are all in the 90+% occupied tier. So that market has been healthy. And I'd say for an elevator snapshot of what the suburban market is, it's a $25 market with a $5 spread. $25 is your mean. Your premiums can trade as high as 30, and your discount stuff that might even include sublet is closer to 20.
Well, what are the nature of some of the tenancies? So you used to be financial institutions going into these buildings. Who are going, or law firms? Same type of a scenario?
It's basically, a lot of it's just trading spaces amongst themselves because it's all local Westchester tenants. It's insurance, it's accounting, it's attorneys. One of the biggest problems we're having in our market is there's no influx of new tenants. There's no big Citibank coming into our market to take a few 100,000 square feet. Nowadays, the average deal is a very small 2,000 to 3,000 square foot deal. A lot of it is startup. People who've lost their jobs decide they're not going to sit home anymore, are starting up their own type of company. We're seeing a lot more need in the smaller space. What our market could use is the old days of somebody from New York packing up Citigroup or a bank in New York or one of the big banks coming up here and saying we need 150, 200,000 square feet. Even if it's back office, we're not getting it.
What, John, well, what type of products do you see getting a big play in the marketplace for investors in 2011? Are there any unusual type of product?
I mean, users coming into Westchester. I mean, that's who.
Yeah. Well, or are people going to be selling residential properties, strip centers, or is it going to be across the board?
I think that we've seen a lot of multifamily come on the market recently as prices have pricing went down in 2009 and it stayed strong in 2010 for well-located buildings in stronger demographic areas. I think that we'll see additional product come online as owners realize that pricing is good. Capital gains rates are not going up, at least on the federal level, and we'll have a very vibrant multifamily market going forward.
Bill Hess, who's going to fill the empty A&P stores and the Pathmarks and the Wallbounds?
Well, in many cases, they'll be filled by other supermarkets.
Could you name some possible supermarkets that could conceivably be looking into this area?
Well, for instance, there is a southern upscale chain, smaller. Their typical supermarket is 20,000 square feet, called Fresh Market, which has a store right now in Connecticut, in Westport, I believe, and they're about to open up in the Old Navy store in Eastchester on Route 22, across from Lord & Taylor. And know they're going to be looking. And the DeSico family has been growing and looking. And you've got Stop and Shop, very aggressive, and ShopRite, very aggressive. So a lot of those will be taken over by that, and they'll other creative uses among other anchor type of tenants.